Okay, good morning, guys, and welcome to the European crossover webinar. And apologies, I was up late in Asia with these crazy markets, and I actually just overslept and didn't hear the alarm. Well, actually, I heard the alarm, but and one moment. So here we go. We're starting here, and let's go on and get this rolling. As I mentioned, with these markets, I was up very late, actually experimenting on some things, such as screen recording. So I was trying to, and besides trading, was looking at some other things too. So anyway, that being said, apologies on this late start. But we're up and running right now. Let's go on and take a look here with the euro, which has finally advanced up here. Now, yesterday we actually, and let's go and put this in here. We actually made it right to the resistance from yesterday or the prior day, which was the 890. And we've added on a little bit further on this, but a bit surprisingly, I thought we would have seen a little bit more follow through or more of a gain with the euro, but the dollar did go on eventually go on and succumb. Actually, the dollar was actually at the time yesterday was bid early in the session, and then we finally started to go on and come back in, and maybe we'll go and see this euro start to push further. We're actually seeing the cable come off, and we'll go on and take a look at where we stand here with the economic data. Pulling that up right now. I actually restarted the whole system yesterday because everything was just keep everything fresh. So I'd actually rebooted my system, and that's why the data didn't pop up immediately. But that being said, let's go and take a look into today's data. And we don't have anything in the European session until we roll into the States here. And we do have Mexican retail sales. That's going to be at 7 a.m. Eastern. Generally not one that we go on and pay too much attention to, but that's what's going to be out. And then we do have building permits, which is interesting, at 8 a.m. Eastern. Seems like a bit of an odd start. And then new home sales is going to be at 10 a.m. Eastern. So really nothing, if you think about it, until new home sales here. Go move this out of the way. And as you know, we had a pretty wild day yesterday. And with that, let's go ahead and move into the S&Ps before we move into the currencies. We'll just go and take a look where we stand right now. So bear with me. So here we go. Boy, what a day it was. And actually, if you look at it, we even actually have gone sub 3,100 even here. This was just a day for, well, I guess, like I said, that's why maybe all of us may even be a bit bleary-eyed. This was, boy, what a move. If you saw it in, I mean, maybe, well, I'll tell you what, I guess that was probably the reason I did was because I was up till late in Asia trading. Even then, we had some pretty good up and down moves here in Asia trading. I'll actually go on and put this up for 30 minutes. I was up till very late trading. This was something else. Look, you saw the moves that we got down here as we, and I can get rid of this. We come down to 31.30. We actually, and I talked about some support at 31.34. It kind of held for a little bit. We dipped below it. We rallied up to 31.60, made another run back lower. But you can see in Asia, we were bouncing up and all over the place. We made it up to 31.50, and then look at this. the market slides all the way down. I mean, you almost have to look at it much closer to capture the movement that we saw in Asia. And that's what I'm saying. I was up till very late in Asia. So look at this. We rally up to 31.56. Remember that 56 right there. And then, or it might be right here, it's 56. It looks like it's right here at 55. We roll all the way down here to, was it like 31.27? We turn around and work higher, and we come all the way back here. Now this, I remember, is 31.56. The market holds steady. We just start, once again, declining down here to sub 31.35. We make another rally back up here, and then look at this fierce fall we've had. And this part, like I said, I was, conked out after trying to trade in this area here. Actually grabbed a little bit, but nonetheless, boy, did we come off, and boy, have we come off like big. Going sub 31 even. We've rallied back up here to this 31.22, which is, you remember when things broke, initially got past that 31.34. That was the area that they had gone to, which is 31.22. We overshot. If you look over here on the first run up here, that was the move that we had gone to. You see that right here, 31.22. Let's go and mark this off. See how the market always remembers? You see that? Because I had marked off about 31.34, and initially that held, and then when we broke, I remember they went to 31.22. Well, look where they rebounded back up here to 31.22. So it's already been a very wild, a very, very wild day. Well, as wild as this was, gold was something else. And we're going to move into gold right now. The crazy thing is, I was thinking about staying up all night and throughout the entire night and trading. I was thinking, I got to get at least a little bit of sleep. Henceforth, like I said, I just conked out and overslept by about an hour. Look at the moves that we saw here in gold. Now, gold, the bottom came out in gold. I don't know if y'all are paying much attention to it. I know Blake had actually mentioned it in the chat. Gold even slipped down to, I think it was about 1627 to 1627. We did come back up, and we made it right back up in here to the 1647. We took a dip. Look at this, falling back. Then with the S&P sliding, going sub 31, look at us. We rallied all the way back up here to 1657. The key level here is really 1666, and I'm surprised that even as we slid below 3100 in the S&Ps, that we weren't able to get up to 1666. One moment. Anyway, so let's go on. And Greg was asking, I was mentioning, as I mentioned, I was almost going to consider trying to stay up all night with no sleep. And I said, no, you got to get at least a little bit of sleep. So I went to sleep. It was just right at midnight. So I guess I would have only ended up with 2 hours of sleep. So I got 3. So now let's go on and switch back over here to crude oil. Well, lo and behold, and like I said, we're kind of touching base on everything. Obviously, a lot of markets that have moved. Finally, here in crude oil, I made this comment a couple of times in the chat room. I could not get how crude oil was able to hold above the $50 mark with all the craziness that was going on here. So we finally, later on in the afternoon, I think it was in the afternoon, we finally, got a $49 handle. You can see here, even in Asia, they rallied back up. Got a $49 handle. Well, as crude oil broke, not crude oil, I'm talking about the S&Ps finally, they broke 3,100. That even finally got this down to the lower depths right here, all the way down here to $49. I am seeing the S&Ps back up in here, equities back up here at the 31.22. So certainly missed this big move down here, but the moves have just been humongous. So with that, let's go and move into the currencies. So hang on, kind of give us a backdrop of, to me, three key markets. Obviously the equities, gold, and to a certain extent crude oil, although surprisingly crude has not responded as much as you would have thought of. So bear with me. Okay, so here we are. Let's go and move on to the euro. And pulling out the old bias chart. So hang on. Yeah, Greg was saying only algos don't sleep. Yeah, I found that out. I really was going to see if I could go without any sleep, and I guess that wasn't going to work. But anyway, that being said, so let's go on and come here with the euro. As I mentioned here, this was a resistance that we had for yesterday, which was obviously Tuesday. We actually held right there at that 890. So, and the range, once again, stayed in a relatively tight range, although initially we were trading a little bit negative. You can see here, right here. But anyway, let's go and move on. So it says Tuesday's equity sell on continued coronavirus concerns. Saw the euro mildly add on to recent gains. Overhead resistance level 890 was tagged. Further dollar erosion can potentially send the pair to 957, which is confluencing with 953, which is a 38%. You can see that there. Initial resistance will be the 914 with support at, I don't see the S&Ps right now, 31.26. With support at will be 836. So we're still in that tight range. If we do slide back, things get a little bit nutty. We could come down as low as 836. So what we're looking at, this is moving up to 836. I can't even believe the moves have already transpired in that short amount of time. I'm talking about the SPOOs going sub 3100. And then on the upside, we're looking at 914. Now, what we're looking here is, as I mentioned, is potentially, as we get these gains, I think that we may see further dollar erosion. We can see this market get up to 957, confluence with 953, which is the 38% of this range of 776 to 1240. I haven't done it yet, but if we see some, but I do believe with the cash dollar index, we do have the potential to move down to 98.42, which is the breakout level. We'll certainly get to that. But anyway, that being said, on a very short-term basis, you see right there, coming in right there, is going to be 914. So that's going to be our resistance, 914. And if we do get that slide back and the euro does come under pressure, we're looking right here at 836. That would be, for that area to go into defend. That'd be our support. With that, let's go move into the cable. Now, this cable, I was looking at this last night and I was thinking, boy, this thing sure has been, I don't want to say herky-jerky, but, we got this gain. I was thinking this yesterday when I was doing the analysis. We got above 2980. I'm thinking, okay, well, now they're going to go and advance on it. But even then, the advance is probably going to be rather limited. And I think that I put the resistance here, and I thought, well, seems like it'll come up to here. We finally reclaimed the 2980. But look, we've turned around and given it right back. So let's go and pull up the thoughts on this for a moment. So the cable took out the pivot level, 2980. We just talked about that right there. As coronavirus fears weighed on the dollar's strength, resistance for Wednesday will be 30.54. Because like I said, I was like, well, you'd be looking up here like, you know what, I'm not buying it. That they did gain, but you know, knowing the cable, it'll probably be limited. Well, heck, we just turned around and just gave this right back. But anyway, resistance will be 30.54 and support will be 29.32. Well, it looks like we just made it. Well, we made it down to 29.34 and I've got support here at 29, had it for 29.32. If you go with the lows here, with the prior day's open, look at here, and the prior day's close, that would be 29.26. So yeah, 29.26. So let's go with this. Really disappointing action here. You think about it, 29.26. And on the upside, I don't know what to think about this. I don't want to put it at 30.05. But I guess we have no choice. This is what I was going to look for, that for this market to come up in here. And but henceforth, we're not even doing that. You can see here the open here, confluence is with here, which is at 30.05, and at least for today, right now, at this point, we'll go with that 30.05, which is 30.06. So we'll keep that. Let's go on and move in now to the Aussie dollar. Well, we finally broke above these lows. One of the things we're doing was holding here. At least right now, we've broken below these lows, and we'll get to that because we've talked about some key weekly support. But let's move on to this. Okay, so the Aussie remains in a constrained range. Well, they finally broke lower, though. The new low for Monday held. For Wednesday, resistance will be 66.52. Obviously, we've broken below that. And with support at 65.84. So resistance was going to be 66.54. We've gotten below that 65.84. And what we're going to actually be looking at potentially, certainly looks like we're heading that direction, is when you look here on a weekly, well, yeah, we do need to put this on a weekly to get that level. Right there. You see that? There's that 65.28. Right there. It's still a little bit of ways lower, but I think realistically that's what we have to look for because this thing continues to remain weak. So it's going to be 65.28 that we're looking for this market to potentially get to. And when we take a look here on the upside, you can see it right there. Clears the bell. That may be a little bit too tight though, 66.02. So we're just going to go with the right here, which is 66.27. 66.27. That would actually, if they can get beyond that, that could trigger a little bit of short covering. So it's going to be 66.27 on the upside. Obviously still bearish, as is the euro. Even though the euro's rebounded some, it's certainly not out of the woods. So the euro is definitely still containing its bias for bearish. Okay, let's go on and move into the Kiwi. Kiwi, same thing, although it's just has not pushed to new lows versus as the Aussie did. But let's go and move on with the Kiwi. The Kiwi, just like its cousin Aussie, remained in a tight range. Well, the Aussie obviously is broken out of its tight range. But anyway, resistance is going to be the pivotal 63.83. I think that might be a little bit ambitious to go with 63.83. We'll adjust that. We're supported 62.88. The 62.88 is still going to remain. You see here, 63.83, bit ambitious here. Let's go and take a look on the 2-hour chart, see if we can see something before there. There we go. I'm still looking at the Aussie down there. Hold on. Oh, those on with the 2-hour chart. So let's go on. This market is so weak. Let's give me right there, 63.61. Call it 63.62. And let's go on and move in now to the dollar CAD. Dollar CAD was interesting. I thought yesterday, we finally break up here, and then we just kind of go radio silent, look in this range here. So we said with the dollar CAD, dollar CAD's newfound momentum was quickly stymied. The pair barely poked its head above 33 even. Resistance remains 33.38 for a closing basis that would extend a new leg for bulls. Because if we can get that close, we're not that far away. If we can get that close above 33.38, then we're going to go on and push for a new leg. But you can see here that despite the move that we saw on Monday, we turn around and give that right. I mean, we didn't give it back up, but we definitely stymied at this point. For those that are looking at the S&Ps, the VWAP right now is at 33.32, and we just hit 31 and 3/4. So that's going to remain the same here, 33.38, and the support will also be key, which is going to be 32.40 for the bulls. So obviously with this tight range here that we saw, and I thought we were going to extend this move, and as I mentioned, it was just stymied. It's going to remain the same. We're not that far away. If we can get a closing basis above 33.38, that will kick off a new leg for the bulls, and 32.40 is imperative for bulls to defend on a closing basis. So no changes there. With that, let's go and move on to the dollar peso, which has been one of the more exciting markets as far as the movements we've seen there. Look at this. Wow. Markets still continue to press up higher. And that's interesting because this bar, which would be noted as a long-legged doji, generally what that means is that the market is going to take a respite in the opposite direction of where the market has been moving. So you can see, obviously, it's gone to the bull side. With the long-legged doji, bulls don't have control, bears don't have control, but we usually generally will pull back for a bit of a respite. So looking at the analysis, the dollar peso finished the trading session on Tuesday with a long-legged doji. The pattern suggests the most recent move, bullish, needs to take a respite. Support will be 1898, followed by 1892, with resistance at 1916. Well, there's our 1916, but we've impressed even higher. Look at this. So what we'll have here is the 1916, although we're below that right now, but we will have a secondary, which is the old not old, but the 23, which is that key pivot, the 1923.6, which is right where the market ran to on Monday. Then we pared back quite a bit, and then we made another stab higher. We didn't get above it, but we made it appear almost to right at 1920. I'm surprised that we were able to take that out because, like I said, long-legged doji, bulls don't have control, bears don't have control. You finish right in the middle, so generally you take a respite. Well, heck, we've even pressed it to the upper side, but guess what? Makes sense. Look, the SPOOs are just taken out. Remember, they've gotten below, they've gone sub 31, so of course they were going to press it. Actually, despite this long-legged doji, when the SPOOs got sub 3100, I'm surprised we didn't even blow past this. So, but nonetheless, resistance 1916 with 1923 being the pivot. Support at this point is going to be 1905. There we go. And let's go move into the dollar yen. I'll tell you what, despite not getting that much sleep, although oversleeping, I feel refreshed as a daisy. Holy smokes. But anyway, let's go and move into the dollar yen. Now this has been really quite, I was going to say all over the place, but boy, what a dramatic sell-off we've seen here with dollar yen. So dollar yen continues its steep retracing going sub 110 before a mild recovery. Resistance is going to be 1063, followed by 1102. Support will be 988, followed by 964. So we're trading in a relatively tight range here. So we're going to go, as I mentioned, it's going to be 1063. And support 988. This has been some kind of move. I'm surprised, with the move that we got in S&Ps. I still can't even believe that in that time that I was asleep that we actually even went sub 31. I mean, God, we had already tagged above 3050. Actually, as I mentioned, we got up to 3056, 3053, and I think 3055. All three different highs that they went to before going sub 3100. I'm still just really surprised on that. But anyway, that being said, so as we went sub 3100, I'm surprised that we didn't, at least make a run up. I would have been like, wow, now that explains it. We got sub 3100, we tagged 927. Well, maybe not 927, which I think would have been reasonable. I'm surprised that we didn't at least come down here to about 960s, in the 960s. So this is a bit of a surprise here with the movement that we've seen in the S&Ps. Really a surprise. As I mentioned, upside is going to be 1063 with downside 988. But considering the moves in equities, this is a bit of a shock, honestly, that we did. I mean, at the very least, go sub 110, take out the previous levels. I mean, this was with yesterday with the S&Ps dipping down, what was it, about 31.19, 31.20. We go sub 31 and we can't even test those lows. So it's a bit of a surprise to say the least. Let's go on and move into the cash dollar index. So the dollar index began the week on the bid, resulting from a safe haven bid. Once in the this is a U version, but anyway, the dollar began to once in the U.S. session. I don't know why that came up. Once in the U.S. session, the dollar began to yield its strength, finishing in the middle of its range. Support is going to be 99.04. Well, we've gone, and actually this one didn't update because I don't know why it didn't, because my analysis was that we can potentially make a move down here to 98.42. Although you can see here, now here was from that analysis saved it from Monday. I never put in the analysis in the Asian session, but remember how we pressed below here. And we actually did okay, hold up above this 98.82, but I think that potentially, and actually we're back a bit on the bid again, the area that I'm looking for this market to eventually challenge to on some further dollar erosion would be this breakout area, the significant, this 98.42. And I can remember, as I had listed my resistance at 99.18. Well, potentially, as we're holding up here, if you're looking where this market could potentially go to, if, once again, we talked about the euro weakening, if the euro were to slide down to 36 intraday from where it's at, which would be 836, then potentially it's going to be 99.33 here on the cash dollar index that could equate to. I still think that with further dollar erosion, we can go for this breakout area, which is 98.42. But in the short haul, it's going to be 98.72. Okay, let's go move into the cross rates. I saw a story yesterday about Tesla. I think someone mentioned it on Twitter, and I thought, man, where is it? I think it was Ivan the K was saying, I guess he'd make a reference, kind of a joking reference, but he said, what a great trader. Because I think that um, Elon Tusk had not dumped a lot, but he'd converted so much. I guess close to these highs. So it hasn't fallen too much. It has fallen definitely, but I was thinking maybe it was a lot lower. I went to go and look at that, but yeah, what a move up in here. I was even thinking about this when I saw this yesterday. I go, you know what? That's like an evening star right here. And then obviously a lot of this move had to do with over the weekend for the coronavirus. Anyway, let's go and move on to the Kiwi yen. So we did see this market for the weekend. Now, as I mentioned, I am surprised that the yen has not been able to strengthen. I mean, especially when the spoon went sub 3,100. Bit of a shock, honestly, that we didn't see the dollar yen at least go sub 110. Not to mention, at least, realistically get down to 960. So a bit of a shock. I'm not sure what was going on with that dollar yen, but we have seen the yen strengthen, not as much as I would have expected. Once again, even with the Kiwi here, but it did push even the yen strengthened further, obviously with the Kiwi working a little bit lower in and of itself. So when we look at, we had this here at 69.74, obviously this level, but this is where you have a lot of volume coming in across these lows. You see right there? Actually, look, that's where they made it to 69.52. We'll just give it not a whole lot of room, but we're going to go right there, which is 69.44, which is just a hair under the day's lows. But you can see the volume there. So it's going to be 69.44. Considering the weakness in the Kiwi, I'm surprised that we didn't even press even lower. And then on the upside, if we're able to come back, it's going to be right there, this open here. Right there. That would be resistance, which is going to be 70.24. Let's go and move in now to the euro yen. Now this was a little bit almost like a little mini legged doji, but you can see here we're still even trading within a tight range. I still can't get over the yen. I'm surprised that it didn't strengthen. I don't get what was going on here, but there are some concerns that the Japanese will look to go on and provide further stimulus. Maybe that's keeping it in check. I'm just a bit of a shock. I mean, I guess if things were to turn around, maybe you'd see the yen really weaken, considering how it did not strengthen in light of or in face of this huge equity sell-off across the board. That being said, looking at where the resistance is going to be, let's go on and move into the 2-hour chart. Right there, 2047. 2047 would be resistance. No, we already had it, 2046. Leave that there. And support, well, it's pretty clear where support would be. I still am a bit shocked that we're going to move it here because, this is really interesting. I think a currency that we need to look at, and I wonder if they're going to address in face, really is the lack of reaction here in the yen, the dollar yen, which makes me think is, wow, if indices eventually do rally back, this dollar yen is probably going to go to the moon if it wasn't able to break with this huge equity sell-off. Anyway, that being said, support's going to be right here at 1976. 1976. Not sure what we did have. Okay, well, fine, perfect. Let's go on and move in now to the euro odd. Well, we've continued to go on advance here, as like I said, as the Aussie has continued to weaken, and has not only weakened, but has come across apparently across the board. And we've seen this gain. Probably a bit surprised. Well, I guess because the euro, it still hasn't. Well, it has certainly advanced against the euro. It hasn't advanced that much against the dollar. We're going to go with this level right here, which is 66.10. And boy, we have really made some pretty good. It might be a bit rich here. Well, no, not really. We're not that far away. So let's go with 66.10, thinking that the Aussie will continue to weaken. And support. Well, this has had one heck of a run. So let's go and take a look on a 2-hour chart. Holy smokes, what a move here. It's going to be right there, which is just a little bit lower than here, but that would provide us some volume, which is going to be right there, 64.70. 64.70. You can make an argument here, but we're not that far away. We've already had a pretty good sizable run, so it's going to be 64.70. And let's go into the Euro Kiwi. Well, a bit reminiscent of the Euro odd, as the two antipodian currencies are just equally weak. Where can it push to? Well, you see it right there, this huge level here, 73.09. Let's pare this back a bit. You can see that huge level. Obviously, a target they'd want to go to. That's going to be a resistance here, 73.09. It's amazing some of these moves we've already had already on, with these antipodian currencies. Which would be 73.09, and support. Well, you can see right there, they're going to defend it right here, 71.72. And let's go move into the ASEAN. Well, we've got continued to further weaken here. It's interesting to figure out how much further they're going to go. But once again, the yen is just not appreciating as much you would have thought in light of the sound like a broken record, but in light of the equity sell-off. Resistance, or not resistance, but support is right in here. Now, they did dip below it, but you can see here, look, coming across here, here, good solid support. You'd have to give it at least a little bit more room, I would think. You can see right here, this low here, that comes in. Well, there was right there. That was a low from before. 72.39. So we're going to go with that 72.39. And this is going to be resistance here, 73.07. I'm still a bit shocked with this yen. I'm not even trading it, but I tell you what, I can't believe we didn't even, at the very, very, very least, go sub 110. We didn't even take out yesterday's lows, despite the S&P's taking a pretty good whack. Let's go move into the guppy. Well, this is probably a little bit more about sterling weakness versus yen strength, but you can see where they've made a move to, and we're just going to go with the levels, considering the yen's not even reacting that much overall, which is going to be right here at 42.67, right there, which we had 42.66, so we'll keep that. That was in check. On the upside, once again, as I mentioned, more about sterling weakness as opposed to yen strength. You can see the volume coming across right there. It's going to be 43.45. And let's go move into sterling on. This is interesting because we've had Aussie weakness, obviously some sterling weakness, and this little, we'll see how the day finishes out, but it almost looks like a little bit of a greystone doji. If you look in the overall context of the market, I guess, yeah, you could say almost like a little bit of a greystone doji. Let's see how the pair finishes out, but a respite might be due. We have this key resistance level. You can see right there. 97.23. We are below it. You know, that's it. I was going to say, but the Aussie's been so weak, but it's going to be interesting where this closes today. We're going to stay with this as far as, not stay with it, but I'm saying we'll go with this for right now, which is going to be, we're going to call it 97.26. Right now for resistance. Well, we did have it. Look at that, 97.27. I think we could see a little bit of a pair back here. Let's go and take a look at it on the 2 hour. He's actually come down here to test these lows. It's going to be right there, 96.13. Oh, look at that. We had 96.16, so really no changes. We'll leave that there. Well, let's go move back into the majors. Euro's still kind of holding steady up at these higher links, although you would expect it to move higher. We did get the cash dollar index back on the bid here, although I think eventually we can erode down to 98.42. Cable continues to remain weak. I'm still at a loss for words on this dollar yen. I cannot believe that in light of the sell-off we saw in equities, we didn't move lower. That being said, let's go on. We did a quick brush as we came online, but let's go on and move into the equities. Obviously, a huge mover. Let's see if we can do some work there. So let's go move into the spoos. Okay, I'm already there. Okay. Hang on. Didn't know I'd already switched the screen over. So let's go and take a look here at the spoos. I was watching in Asia. I mean, I did jump in this spoos just for a very little bit, but I was actually trading gold also. But holy smokes, man. We saw some pretty doggone good moves here in Asia. Look at this move up in here. And actually, I'll just have to wait for this little market to reset. But you saw some of these moves. We challenged this 31.50, 650, 53. I think we went 31.50 first, then we went 53, 56, then 53. Look at that. I mean, we had some really good moves here in Asia already, but let's go and take a look from a little bit longer extent. You can see here we're looking at the 10-year note. It's the one market that I'll look at when as a 4-hour. Everything pretty much my length is going to be 2-hour. Let's go on and take a look here though on the SPOOs, a little bit longer term basis. Actually go to, this is on the daily chart. I thought I had a weekly on there too also. Let's go and take a look where we stand here on a fib. Well, 31.45 was the 23%. And I'm looking for things that are, I want to say not meaningful. Well, I'm not meaning, I was going to say they were meaningful, but I mean meaningful in the sense of where we're at today. I mean, I'm not, here on this show, we don't go for long terms, but or even necessarily even medium term trading. But obviously, the extent of these moves has just been something else. So let's go and take a look where we're at right now. Now we do have some support coming in here, so hang on. And as you know, I always like to go with the doggone it, with the body. So hang on. You see right here. That's how I came up with that 31.34. And we saw a nice reaction yesterday from 31.34. Remember, the market had taken it out for, I think, about 3 handles. And then we rallied up to 31.50. But then the thing turned around and rolled back down. I think the high at the time was 31.48. So it really wasn't bad. And then, of course, when we went back down and kind of revisited that. So you can see here where they found that support. They went sub 3100. This area right here is 30.94. I think, and you can see, look, let's pull this back for the look. You see how you have all these little touches here? And this is a daily chart. It's not like as if it's a 2-hour chart. You can see right here, that's pretty solid here. I think that you could look, let's say that we get these dips back here. I'll give you an example what I'm referring to here. So let's say on the 30-minute, you get these dips back here to 30.10, 30.12, if it were to pair back that. I think that realistically, you could be a buyer knowing that you've got this, doggone it, you've got this cushion, which is on the daily behind you. I'm going to mark this as with me. I'm going to widen it out because I think it is key. It doesn't, when you look at it, you're thinking, well, it doesn't look like, I mean, yeah, it's support, but it doesn't look that key. But to me, it does. You see here, it's right all at these tops. You see how the market was, and this is once again, like, it's not like a 30-minute chart or a 2-hour chart. We're talking about a daily. And when you pull this back, you think, okay, well, that's a bit more significant. Look at this. There we go. You see here, we're bumping up against this area. You see that we're, got above it, closed below, closed right at it. Come right back, we sell off, come back into this wick, we come right back up. Look at that. That is very, very key support. Well, doggone, like I said, I wish I hadn't tried to stay up all night trading and ended up conking out, but that was a very, very nice level. Although it might have been even before I would have been up at the time. But look at that. That is a very good level. So I like, if someone's trying to play the long side, one of the things we were looking at yesterday when this market was falling, I'm like, whoa, I can't touch this. These levels are coming, and my concern was we were going to hit an air pocket. But now you've got something to base it against it, which is this 31.94. And it's not just a level that we shot to. You can see here, look at all these different touches here. You see, this is over the course of quite a bit of time. Look how much time we spent here at 31.94. Tagging this area here. So I think that's pretty solid. I meant to say 30.94 is pretty solid. So I think this is where the market will be trying to defend in the very short term. Of course, you have a couple of touches right here, which probably takes us about 31.15. We'll just go on and take a look here. Watch. You see? Now that comes in at 31.06. So you got a nice little band here. Look at this band here. So between 31.06 and you got 30.94. Now, like I said, you have to factor in that these markets, I'm not these markets, but this index today we'll still see some volatility. But I think that we've broken the back of enough people here on this move. Remember, we had let me go back here. We had 3109, okay, 3209, which is pretty important. 3180 is the yearly low, and we'll go into the 2 hour quickly. So I think this is, look at this right here. You've broken the back of a lot of people. And look, this number here was very key. Here's my 3134. You see, I actually apologize, 3150 right here. You see, I think you've broken the back of this market pretty good. I actually thought this was going to hold up pretty well initially. Once we got past the yearly low of 3180, I thought we might get down to about 3146 maybe, and then we jump right back up. That was not the case. You see what I'm saying? We just kept on pushing lower. Hence, we got down to my 3134. We did bounce back up, but we had come down here to this 31. We went eventually sub 3120. But once again, like I said, yeah, you're going to see a lot of herky-jerkiness here. And let's take a look here if we can see some confluence here. Here's some good volume touches coming in right there. Well, that was right there, that 3120. And let's see here. And right here. Look at that. See all those touches? Well, that's where we went sub 31. This whole area, there you go. No, there's your 3094. It's actually 3092. This whole area, we've got a nice band here. So if the market were to dip back, and I'll give you an example right to here, which is 3109, I think you could step in and try and you have to know levels. I mean, the market's moving so fast, levels that you can say, okay, I can come in and how much, I don't want to say how much heat, but you have to be reasonable. If we were to take a dip back, we're actually holding up here at this 3138. Areas where you can say, yeah, okay, I'll come back in here and I'm willing to risk, realistic, you have to be willing to risk about 12 handles, considering the movement we're seeing. Although we're kind of holding our own right now, but you can see here that was key daily support here, that 3094, kind of holding on right here at 3122. Once again, I think a good area coming in here is going to be right down in here. Right there, 3107. There. There we go. Let me just stay here, right there. 3105, 3105. So right there, it doesn't mean it'll make it all the way back to 3105, but once again, you could look to go on and pick up on what could be, I don't want to say an extreme because it wouldn't be an extreme, but you can see here, any dips between 3105 right to here, which is, that might be a little bit pushing it, which is going to be dips to about 3108. So that little area there, if we make that dip and we make another quick touch in the morning, which I don't know, we're holding up pretty well. You'd want to, at least for me, I'd be looking to go up by 3108. That little zone between 3108, 3105, and look, you've got some good solid support. And that good solid support beneath you, look at the daily. Look at that, 3094. So any moves down here, and let's pull this back here. Look at that. You see that? Look at that daily, 3105. Look at these touches here, right there. 3105. So now, to me, I look at it, hey, I want to be a buyer on dips down here to 3105. I've got even some daily support, not to mention some good 2-hour support coming around. And my firewall, so to speak, on the backside is going to be this 3094. So that's the way that I'm going to be looking at it. Here's on the 30-minute. We pretty much laid the game plan out. Really short-term, immediate support. Well, there's your 3107 right there. You see that? It's all adding up. You see, there's your 3107 on the 30-minute. Because I was just going to say, we've already made that dip, and the market has a bit of a little hammer bottom. Any movement back in here is going to be defended. I mean, they're going to try and defend it whether we break in the morning or not. Well, guess what? That comes in right there. Look at that. There's the area for them to defend. Right there. You see? 3107. We talked about between 3108 and 3105. So there we go on the SPOOs. Let's go and move into the gold market, which was really something else. Hang on. Now, we saw a really good sell-off down here to 31.27. I mean 16.27 before it rebounded. We're kind of holding up here. You know, I don't even know what to think. I actually sold the gold in Asia. It was just for a quick scalp, but I don't. Here's the thing: we've already sold off quite a bit. We have cleaned out the market some, but I don't even know what to think with this market at this point now. I don't have a good feeling on this at the moment. I would have thought, I mentioned yesterday, 1666 is key. I would have thought we would have gone to 1666. At least I would have thought we would have gone to tag 1660 when the SPOOs came undone under 3100. And the movements have been large here. And I'm talking about these intraday movements. I would have thought we'd have been able to come up here. You see right there? That's key. And I was looking at the daily, but this is on the 2-hour. 1666 is key. I would have thought that right now when the SPOOs went sub 3100, we would have at least tagged 1660. You can see here, this is where they came apart. This is a bit frustrating. I saw this at the close where we ran out of gas up in here, and then we started trickling down lower, and then we really came apart. They cleaned them out. We're working higher. I don't know what to think with this. I mean, you can see there's some resistance here. Right there. But I just think we're going to kind of be backing and filling. The part I don't like is I feel like if I step in, you can easily see this market push up $10. It probably has a lot to do, a lot of work to do and to digest. And eventually we probably will break back down closer to the middle 16 teens. But this would be huge. Anything against 1666 you'd want to. I guess you could sell it with the thought that with as long as you don't get a 2-hour close above 1666, but it's still a lot to give up. And I think that right now the market is tired. That's the way that I would look at it at this point. I think that's the best way to describe it. And that's my concern is we are getting some movement, but I think at this point when the market got up here, a lot of people got snockered out. Now the market's coming up here, but it just feels tired. Like the market's just like that. It's not going to have the good movement you're seeing. Let's say with the equities, you see what I'm saying? I just think it's a little bit worn out, susceptible to even move a little bit lower, but I just don't know. I mean, I think you put a position in, I think you get stuck and you're hold on, and then you're about like, well, I'm not just going to keep on holding on. This is crazy. And then you eventually get out for a couple of bucks or something like that. And then you see the thing fall apart. So don't have a real good take here with the gold market here. That being said, we'll just quickly make a quick flyby in crude oil, and then we'll call it a day. Well, we finally went sub 50, and I'm not. The odd thing is that last week, really, the bears were done in last week because we got that close above 52.82, and then we turn around and obviously you can see right in here. You see that we got above 52.82. I had a marker on it for the daily. I think it is. Let's go here. And we have just continued to come down and roll over and roll over. The one thing in the ointment has been that the Russians are saying they're still talking about whether they will do any action. I don't think that the Russians are going to do any action anytime soon. So it really opens the door for this crude oil market to continue to weaken. I think that I saw something. I usually don't follow fundamentals, but I saw something about that the shale producers may really get snockered a bit. So if you rush it, makes sense to let this market just continue floundering and dip. I don't have any outright levels. I'll actually have a weekly chart here. Hold on. So we can eventually come down here to 47. And I think that if they can press them a little bit lower, then you'll knock out a lot of shale producers. And then at that point, Russia steps in and says, oh, we're going to do this. And then crude oil pops up. But once again, with the slow global activity, it's going to have a hard time. I'm surprised that we didn't go sub 50 earlier. And I haven't even done anything with crude. I've had my hands full between S&Ps and gold. And as I said, gold is really, I think it's exhausted at this point. I'm going to have to let it see what it does today. I don't really would not be trusting any action in gold today at all whatsoever. So I may keep a little look on crude. But on the upside, appears to be about 50-30. And that's all we have for today. But thanks for joining us here. And like I said, I think I'll be canceling my trying to stay up all night trading. But thanks for joining us here on the European crossover, and we'll see you in the chat room.